Welcome, everybody. This is Peter Schiff. It's Wednesday. It's the Peter Schiff Show here on SchiffRadio.com. Taking your calls live, 855-4-SCHIFF, 855-4-SCHIFF. Well, a lot of stuff going on today and yesterday after the close. You know, we got the minutes of the most recent FOMC meeting, and we just got more statements from Ben Bernanke, basically confirming what I've been saying all along, that QE3 is coming. Basically, Ben Bernanke and his buddies at the Federal Reserve are saying that more easing is coming if it's required, right? Meaning if the economy starts to weaken again, if unemployment doesn't come down, we're going to get QE3. Now, of course, the Fed doesn't even stop to consider that if QE2 didn't work, why would QE3 be any more successful? You know, quantitative easing, using quantitative easing to fight recession is like using gasoline to put out a fire. That's the problem. You know, when you throw the gasoline on a fire, initially it looks like the fire is going out, and then it comes roaring back even stronger. That's what happens with QE. That's how I knew. You know, when everybody was on television, all the experts, you know, Steve Leisman on CNBC, who still refuses to acknowledge that he bet me with 5-1 odds, I bet 10 grand that we would have QE3. He said it was impossible. I said it was a sure thing. The reason I knew it was a sure thing, and the reason, you know, guys like Steve Leisman are clueless, is because I understand economics, and the chief economist from CNBC does not understand economics, although he's in good company, because hardly anybody on television understands economics. I'm not just picking on Leisman, but the point is, the reason that I knew that QE3 was coming, and of course, the Fed is not saying it's a sure thing. They're just saying that they'll use it if it's needed. And of course, in their mind, it's going to be needed because the last round of QE2 has done a lot of damage to the economy. And so the economy is going to suffer the withdrawal from the end of QE2, which means QE3 is guaranteed in my mind. But the reason I knew it and all the other economists don't is they don't understand. They thought QE2 worked. They thought the economy was growing. They didn't understand that there was no growth. They don't understand. They see a bigger GDP number and they think, aha, the GDP is going up. That means the economy is growing. They don't look beneath the surface. They don't ask themselves, why is the GDP rising and is it sustainable? And if they actually followed the dots, connected them, they would know it wasn't. And that is why growth is decelerating. That's why unemployment is picking up, because QE2 didn't work. It just masked the symptoms for a while they got worse. And now the QE is going away and we're getting the withdrawal. Meanwhile, the metals market reacted the way you would imagine. Gold soared yesterday by about $10-15. It's up another $15 today. It is now at a new all-time record high in U.S. dollars. Of course, it also hit a record high a couple days ago against the euro. It is now at a record high against the dollar. Silver also surging almost now to $37 an ounce. We were down around 32 just a few days ago. Remember, I've been saying on this show since this correction began, I did not think silver prices would go below 30. I thought anywhere near 30 was a good support level. So far, that call looks to be very prescient. And to me, maybe the lows in silver are in, given the fact that QE3 is now on the table as opposed to off the table. And I think the reason that we had that pullback in the metals was because so many people jumped to the wrong conclusion that QE3 was off the table. Now that it's back on, the dollar is under pressure. The dollar is actually down today against all currencies, including the euro. The euro is back above 140, around 140.50. Aussie dollar is soaring today by about 1.5%. New Zealand dollar nearing a new all-time record high. The Swiss franc today at a new all-time record high. This is the first time in history you've needed more than $1.20 to buy a Swiss franc. In addition, the dollar is sinking against the yen, moving below the 79 handle into the 78s. So not only is the dollar down against all these other commodity currencies in the euro, it is down against the Japanese yen. The dollar index, I believe, is rolling over. We're still trading in the 75s, but I think that given this now, the momentum now, we should be going down for lows. And in fact, I read some reports that bullishness on the dollar had really come back. I remember guys like Jimmy Rogers was saying that he was buying the dollar because everybody else was short. Well, recent sentiment indicators that came out in the last week or so shows that a tremendous number of people who used to be bearish on the dollar turned bullish. There was a real uptick in bullish sentiment towards the dollar, and maybe that has created the condition now where the dollar can begin to fall because now you have a lot of people betting that it's going to rise, including Jim Rogers. And the fact that Jimmy Rogers was fooled into that rally. Now, the question is, when is Jimmy Rogers, who has often admitted he's a lousy trader, but he's a bright guy. I wonder if Jimmy is going to be turning around now that he sees that so many people are betting on the dollar, that he might take those bullish bets off and put the bearish bets back on. Again, this is just the stuff that's going on in Europe. Well, it's problematic for Europe. It is the sideshow. The main event is happening here in the U.S. Also today we got a report that producer prices, or import prices rather, were down for the first time in a year by about 0.5% for the month. And of course, right away we're hearing the Fed saying, aha, this is proof that inflation is coming back down. This is proof that inflation is coming back down. What about all the months where import prices were surging? I mean, somehow the Fed didn't look at that and say, this is proof that our policies are failing and that inflation is getting worse. But you got 1 month where prices come down and all of a sudden, aha, we told you it was transitory. The only thing that's transitory is this 1 month decline. That is the aberration. Prices are rising back. Oil prices are now back rising, coming close towards $100 a barrel. Commodity prices are rising again. Look at the CRB, it's moving higher. And of course, the dollar is sinking and gold is making a new high. What is that telling you, right? What is that telling Ben Bernanke? I mean, maybe it's not telling Ben Bernanke anything because he doesn't know anything. He doesn't understand. But this is a huge breakout now. The high for gold was set back in May 11th. So it's taken a couple of months for gold to break through that new high. But it did it. And I remember when gold had that pullback, you can go back and you can play the tapes of this show back in mid-May when gold had that big sell-off. It dropped about $100. It went down from, I think, $15.40. I'm looking at GLD. All the way down to $14.20. I said back then that gold was going to make a new high, that wasn't the end of the bull market. But there were so many people on television that were saying, aha, it's a bubble, it's burst, look out below, this is it, gold's going down. Guys like Larry Kudlow come to mind. I mean, he was so excited when gold came down because it was proof that King Dollar was back and the economy was growing. And of course, I said, look, nothing goes up in a straight line. And here we go, gold again making a new high. Anyway, don't go away. We got a lot more coming up on the Peter Schiff Show here on SchiffRadio.com. Now, my guest does not come on until 11 o'clock, so if you want to call, go ahead. There are a lot of open lines, 855-4SCHIFF, 855-4SCHIFF. We'll be back with more of the show and your phone calls after this break.
So either loosen up your hair or tighten up your belt. And this time is a good time. Good time. The Peter Schiff Show.